Hey guys, Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that help me build up a sizable rental portfolio in about 2 years. Now manage that portfolio. Today, guys, I want to talk about these high prices that we're facing. So at the time of this recording in January 2022, I'm going to do that probably for another month or so. January 2022, we just had a record year. For home prices across the U.S. Depending upon what metro you're in and what city, state, whatever, it varies. But the national average is somewhere between 15 and 20%. So your local area could be, in single digits if you're in some parts of the Midwest, but it could be, 30% or more. In some areas, your Floridas, your Texas, the Tennessees of the world. There's a lot there, a lot of the demographics. So if you guys didn't see it, I got a video with Grant Cardone. We talked about the migration. He's buying a lot of properties and doing some development work in Florida, as well as buying some stuff in Austin and Texas, because the demographics are great. People are migrating out of California and New York. They're going to these low tax states. And I can tell you, I mentioned that in the video, that a lot of the tenants we've had recently have been from out of state. So people are moving here to Texas. But one thing, I keep getting more and more, or at least more recently, is, Cameron, how do I buy at these prices? Are there still good deals out there? Can I still cash flow? These are all questions that I'm starting to get more and more and more as we see prices go up and rents not keep pace as quickly. Now, some of you will probably say, well, prices are up, rents are up. Or maybe some of you will say, well, prices are high, but rents have still remained low. Yes, that's true. Although Houston had double-digit rent growth in 2021, last year. But something I want to talk about is, and something I want to mention, one, I'll tell you that there are still deals to be had and want to talk through that. But the other thing is, rents can only go up at the end of your lease term. If you have a year lease, which is the standard lease, 1 year, your rent cannot increase through that year. So you're marching along like this year over year, and this year rents have just asset prices have skyrocketed. So they're going up like this, and you're trying to step up and keep pace 1 year at a time, and you just can't do that. You can't do that when you have prices that can go up month after month. So I can buy a property, or you can buy a property, and you can fix it up and turn it around in 30 to 60 days and sell it for 50 or 100,000 more than what you paid for it. We can't do that in a rental. I mean, you could do that with the rental property, but as rents, you cannot change it for the duration of the lease, which is standard 1 year. So why do you think, that makes sense, right? So that should tell everybody, okay, well, duh, rents haven't kept pace because they can't. So I just want to make sure I plant that seed with you guys, like, well, asset prices are outpacing rents. Rents are dropping or relative to asset prices. Well, yes, but it takes time. As asset prices cool off and rents still continue to climb, I think we're going to see those match again, or at least keep that relative ratio they had before. So that's the first thing. Rents are going to continue to rise. I don't see how they can't. Property taxes are going up, insurance going up, rents are going to have to increase. My opinion, take it for what it's worth. I don't know. That's what all the data is saying, though. So that's the first thing. The second thing is, how am I supposed to find a deal? Cameron, are there still deals in Houston? Can I still cash flow? I'll tell you one thing. It is extremely hard to cash flow. I used to think it was hard to cash flow back in 2015, 16, 17. It's extremely hard to cash flow now. However, if you guys are buying deals and looking through the long term, I've told this to so many owners so recently, and I wish I would have bought more deals when I had the cash instead of doing some of the burst stuff that I did, because I would be a much richer man today if I had bought a lot of the deals that were good deals instead of waiting for the great deals. And I think for most of you who don't want to be full-time real estate investors or full-time property managers or full-time, real estate agents in the real estate profession, for most of the listeners, they're just working a W-2 job and want, 5, 10, 15,000 a month coming in from rentals. You can do that, or at least you can have that with appreciation and debt pay down and all those other strategies, or at least with cash out, refinance, and pulling out money. I think for you guys, when you're buying, you don't need to make it all and quit. I mean, if you want to quit your job, you can definitely do that with rentals. But if you're looking to create wealth, then you just want to buy a property or two every single year. Doesn't matter if the prices are way up, way down, whatever. Just buy a property or two every year, just like you would stocks. So I'm not going to get into it too far, but they call it dollar cost averaging in stocks. You buy a fixed amount every paycheck or every month into a fund or a stock or whatever, and it smooths out because the stock market goes like this. It's the same in the real estate market. It's less dramatic because real estate prices change more slowly than stock prices, but it's the same principle. While the trajectory goes like up and down, it still is going in the upward direction. So instead of trying to be smart and cute, just buy a property or two every year. In 5 years, you'll have 5 to 10 properties. In 10 years, you'll have 10 to 20. And you cannot help but be rich. I don't know how I can say that more passionately and more directly, but if you buy a property or two a year that meet some decent criteria in good areas, you cannot help but be rich in 5, 10, 15 years. If you buy better in better areas, you'll get richer sooner. If you buy in mediocre areas, it might take a little bit longer, but you can still do it. And we're not talking about crazy amounts of money here. So let me back up to the original. Are there still deals? Yes. I think that you guys can still buy property in Houston that makes sense long term. I think from a cash flow perspective, you have been crushed. And I say that meaning anybody who's looking for a property that's going to cash flow $200, $300, $400 a month over, when they first buy it is going to be shit out of luck. However, if you're looking at this 2, 3, 4, 5 years down the road, all these properties are going to cash flow as long as you have fixed debt because prices are going up. I know that several of my properties I bought back in 15, 16, 17 are hundreds of dollars higher per month on the rent than what they were back then. Now, if they made $100 a month back then, which everybody scoffs at, oh my God, it's only $100. Now they're making $300, $400, $500, $600 a month. That's pretty damn good. And each subsequent rise, each subsequent rent increase, and each subsequent, lease renewal that bumps up rent, that's mostly pure profit. Now you have some taxes and insurance that creep up every now and then. Taxes definitely have gone up. But as far as your fixed debt, as long as your debt's the same and you're not doing a cash out refinance, your cash flow is going up. I mean, all the other costs are fixed. So be cognizant of that, guys. I don't want you guys thinking so short term. I was big into cash flow, but there are still deals out there. You just got to be more selective. I've passed on a couple very tight deals recently that we just couldn't come to terms on, but we were very close. So there are deals out there. You just got to look for them. And just to recap, rents have not kept up pace with asset prices. Dollar cost average, 1 or 2 deals a year, and you'll be rich. Most of you looking at this that don't mind your job, but just want some passive income and want some freedom for yourselves or your family in 5 to 10, 15 years, dollar cost average, buy 1 or 2 a year, doesn't matter what the market's doing. And then thirdly, or was there a thirdly? You're buying property, there are deals. Oh, and don't forget that, don't get so blinded by just cash flow and in today's dollars. Think about some of the appreciation and some of the growth that you'll have down the road. I know that's a big no-no for most traditional folks, but I can tell you right now that the majority of my wealth has come from my property values going up. And not just this past year or the past 2 years. I was, when you have $1 million portfolio and it goes up 3%, that's $30,000. When you have a $10 million portfolio that goes up 3%, that's $3 million. No, excuse me, that's $300,000. That's $300,000. So you're making $300,000 on that. That's a lot of cash flow. That would take a lot of properties to bring in $300,000. On $1 million portfolio, just say 10 single family houses, netting $200 to $300 a month. That's $2,000 to $3,000 a month. You're making the same or more on just now $200 to $300 a month on a single family house that you buy for $100,000 will be a lot. So you're probably looking at more of the $100,000 or the $100 a month rule. So you're going to make on 10 doors, that'd be $1,000 a month. You're making almost 3 times the amount of money on appreciation on a 3%, which is pretty conservative, or pretty that's a national average over 50 years or whatever. You're making almost 3 times what you would on appreciation. So I don't want you guys to only play appreciation. I'll run models that are 5, 10, 20%, but please don't forget that that is a big piece of the pie. It's a great wealth builder, wealth creator. Just don't forget that. And there are deals still to be had out there. So keep your guys head on straight, think long-term, dollar cost average. And rents are going to catch up. Mark my words. Maybe I'll repost this in a year or two. We'll see. Thanks, y'all.